What is up, you guys? Welcome to the video. Now, there's been a lot of talk online recently. In particular, I've been seeing a lot of videos, floating around amongst the YouTube community of a potential economic slowdown or an economic, implosion or a recession coming in 2019. So in today's video, I want to share with you guys my thoughts on whether I agree or disagree with this, and more importantly, how I'm going to be handling things as an investor, what type of changes I'm going to be making with my portfolio. So I'll start this video off with a quick piece of advice for you guys, and feel free to skip ahead if you guys like, but just from my experience as an investor, you are constantly going to be hearing that, the stock market's right about to crash, or, the economy is on the verge of imploding, whether that's on the news, whether that's reading like an article online or a forum. There's just so many pessimists out there, and pretty much year round, you're going to be hearing somebody that's just super adamant about the market's crashing or tanking. And a lot of the stuff that you do read online or hear about is what I would consider noise. And that's not necessarily what I'm saying here about a potential downturn in 2019. I'm just saying that when you do hear things like that, take it with a grain of salt. Because, for a personal example that I can share with you guys, I can think back to when I first started working in the industry, which was going on 3 years ago now. And even 3 years ago, there were people out there were articles and investors that truly did believe that we were right around the corner from a recession, or that the economy was about to implode and that the stock market was like on the verge of crashing. At the time, we were 7 or 8 years into a bull run, and people were very much saying, hey, we're due for this correction. And I know a lot of investors personally, and advisors, like professionals in the space, that for years now have been situated in cash, waiting for this big drop that was, supposed to come. And, with such a heavy cash position, they've missed out on some outstanding years in the market. Point being here is that nobody truly knows when the next recession will hit. Even the experts struggle with it. So when you do see an article or online, or you do see a YouTube video about it, like I said, just take it with a grain of salt. Now, if you were to ask me, personally, do I think that the market or that the economy is going to be heading into a recession in 2019? If I had to place my bet, and this is strictly my opinion, this is by no means like a bold prediction or a huge hunch that I got, this is strictly my opinion, I'd lean towards no, we are not yet going to be entering into a recession in 2019. And the reason that I say that is, at our work, at the firm that I work at, we do the best that we can to kind of monitor some indicators and some signals to kind of see if, a recession does look like it's on the horizon. We look for things like the yield curve, in particular, an inversion of the yield curve. We kind of monitor and track some data points like, housing starts, manufacturing indexes, just a variety of data points or indicators that give us an idea of how the economy is functioning. And just at this point, I don't believe that we are quite there at a recession yet. Regardless, and this goes without saying, but every day that passes by, we are one day closer to the next recession. And starting now, I'm starting to make some adjustments within my portfolio to kind of prepare for that. So the first question that I'll answer here and kind of just knock out of the way is, am I selling my investments in anticipation for this crash or bear market or recession, whatever you want to call it, and planning to buy back in when the stocks drop down? Absolutely not, all right? I don't even need to go into this. You already know my stance that time in the market beats timing the market. However, the types of investments that I'll be making over the next little while will absolutely change. What I'm gonna be doing is essentially making like a kind of a tactical shift in my strategy or in my allocation or my portfolio, and putting a heavier emphasis or putting a heavier weighting on what I like to call recession-proof stocks, and kind of lowering down or reducing my exposure or my weighting to some of my more aggressive holdings. And as part of being a long-term investor, which is what I am, you have to come in with the expectation and kind of accept that some years are going to be down. The markets are going to be down, your investments are going to be down. You can't expect every single year to be a positive year, as much as you'd love that. And 2019, if we were to see a recession, could very well be one of those years, or 2020 or 2021, or whenever this recession does hit. That's part of being a long-term investor. It's part of the process. And that's something that's completely fine with me, and I hope that it is with you guys as well. And when we do fall into a recession, which is usually followed by a bear market, when the stock market is, or when the markets are in a bear market, the reality is the vast majority of stocks are going to be down. But recession-proof stocks typically hold up far better. So let's say, for example, the S&P is dropping like 30%, and some of the more aggressive stocks out there, stocks that are typically trade at higher PEs. I think of maybe the FANG stocks, for example, or that's maybe not the greatest example, but some of the more aggressive stocks out there. Let's say these stocks are dropping 30-40%. A recession-proof company, a much safer play, ones off the top of my head that I can think of are companies like, the Procters and Gambles of the world, maybe like some utility companies, or, a Walmart or McDonald's, or like a Dollar Tree, just companies that typically hold up fairly well during recessions. These companies may be down, 10 or 15%. And that to me is very important. So where we stand today, these are the types of companies that I want to be targeting. And to kind of summarize, am I going to stop buying stocks? Absolutely not. I look at it in the sense that, I'm a 23-year-old, and if I have an extra $500 or an extra $1,000 kicking around that I can pop into my investment account, go buy some quality assets for retirement, rather than go spend that money on new clothes or go out on the weekend, like that's a win for me. It's just a matter of deciding what types of stocks do I want to allocate that to. And in my opinion, now of all times is a good time to start putting the emphasis on those types of companies. And in the case that the markets do continue to push on, well, that's great, because I'm still investing, I'm still buying stocks. It's just some of the more conservative plays rather than the growth stocks at the moment. In my opinion, that's kind of a prudent move to make, at least where we stand, in the current market with the current economic outlook. So guys, I hope that gives you some insight into my thought process on how I'm kind of handling this. I'd be happy to hear, what you guys think, or what kind of strategies you're implementing, in the case of this potential 2019 recession. Let me know your thoughts down in the comment section below. But that'll wrap it up for today's video. If you enjoyed the video, feel free to give it a thumbs up. If you're not already subscribed to the channel, I post a video every Monday, so subscribe. And as always, I thank you guys for watching, and I'll see you in the next video.